Ja, willkommen. Welcome everybody to SAP's Q4 full year 2013 earnings press conference here at our headquarters in Walldorf. My name is Christoph Liedtke. I run corporate media relations at SAP. And on stage with me this morning are our co-CEOs, Bill McDermott and Jim Hagemann Snabe, our CFO, Werner Brandt, as well as our future CFO, Luka Mucic. In line with our usual press calls, we will conduct this press conference in English. And during our Q&A session, all of you on the web, on the phone, as well as here in the room, will have plenty of opportunity to ask questions. At the beginning, our executives will provide you with a brief overview of our full 2013 earnings results and outlook. Werner will start explaining our key financial figures. After that, Jim will explain SAP's key achievements in 2013 and beyond, followed by Bill, who will give you an overview about our growth strategy moving forward and our new midterm ambitions. Finally, Luka will present our guidance for the fiscal year 2014. And with that, I would like to turn it over to Werner.
Yeah, thank you, Christoph, and good morning and also welcome from my side. Can I click the slide on my own, or is it not longer possible? No, okay, then. Then let's go to the next slide, which we will skip right away. And let's start with our performance in 2013 in comparison to our guidance. SAP demonstrates in 2013 that we are, I would argue, the only technology company who successfully managed the transformation into the cloud by outperforming the market and at the same time expanding its operating margin. If you look to the details here, we achieved our guidance for the cloud subscription and support revenue. We exceeded our guidance for software and software-related service revenue with 11% versus 10%. And we are in the midpoint of our guidance for the operating profit on a non-IFRS basis at constant currency with 5.9 billion euro. If you look to the additional guidance metrics we provided beginning of the year, if you look to the HANA software revenue, we provided an outlook of 650 to 700 million. We ended up at 633 million as reported, but if you exclude the currency impact, we are above the minimum of this range with 664 million. Our effective tax rate, IFRS and non-IFRS, is much better than originally guided for, and you see the results here. One thing I would like to mention in the context of 2013 is that we had extreme currency headwinds. The euro strengthened against almost every currency, and you here see the financial implications of this. If you look to the software and software-related service revenue, the impact was 625 million, or 5 percentage points. If you look to the operating profit, the impact was 389 million, which represents 7 percentage points, and the margin itself was impacted by 90 basis points. The shift to the cloud was successfully managed, but at the same time, and I think this is very important, we grew the core. That's a very important and successful metrics for our future. We can do both. We can expand into the cloud and at the same time deliver growth on our core business with 2% at constant currency in the full year. If you look to the cloud business itself, you saw 130% growth rates on the previous slide, which, if you exclude acquisitions, is still a growth rate of more than 30% year over year. And here are some of the cloud metrics which are very important and show how successful this business is for the future, meaning how the growth will look like in the future. First of all, it's a cloud subscription and support backlog, which is 1.2 billion, and it's a 50% year-over-year growth. The deferred cloud subscription and support revenue increased by 25%. And keep in mind, that's what we have invoiced our customers for the service which still needs to be delivered over the next quarters to come. And finally, the calculated cloud subscription and support billing for our basis for the growth is increasing more than 50% year over year. Even more important is the number of users. We have the highest number of users in the cloud business amongst all the pure cloud players, with more than 35 million now. And one important element of our growth strategy, Ariba, also performed very well, and by the way, according to our original plan we had and announced beginning of the year when we acquired Ariba. We have a trailing 12-month network spend of 0.5 trillion US dollars, and we have now 1.4 million companies connected through the Ariba network, and that's the world's largest web-based trading community. If you look to our future and the cash flow generated out of our business, it's very important to see that aligned with the fast-growing cloud business and our support business of the on-premise model, our recurring revenue share is increasing significantly. We started, if you see 2007, it's lower than 40% and increased it year over year and are now at 57%. And Luka will later on talk about our ambition for 2017 in this context. That's a recurring revenue we are looking for, which provides stable cash flows for the company. We talked about our shift into the cloud, into the new business model. And we decided to simplify not only SAP, but also the P&L structure for 2014 and going on. And we focus here on the combined power of a fast-growing cloud business and a solid core. That's the reason why we start the first surface of our P&L from a top-line perspective with cloud subscription and support revenue going forward. That's a key element for our success in the future. And then we combine the two different P&L lines which are associated with our on-premise business, being software and support, and provide a sum of both. And all two sums, cloud subscription and support, and software and support from the on-premise business, provide then the software and software-related service business. Then we add the professional service business of SAP and come to the total revenue. This is a simplification of our structure, which provides you more insight into our two business models, one the cloud and the other one the on-premise business, and doesn't take away any kind of information you are used to see in our financial reporting. If you look to the profitability and earnings per share on an IFRS basis, you see, number one, that our operating profit increased by 10%, mainly driven by a decrease in our stock-based compensation expenses, which decreased by roughly 200 million to 332 million. At the same time, we were able, I referred to the tax rate already, to increase our profit after tax by 18%, along with an increase of our earnings per share by 18%. If you look to the margin expansion, then you see that if you look to it from a constant currency perspective, we increased our margin in 2013 to 33.5%, and that's an increase of 150 basis points And we should acknowledge that our full year margin of 33.5% is impacted by 50 basis points coming from acquisitions we did in 2013. Let me continue to provide some insight into the balance sheet. You see that we increased cash on the one side and financial liability decreased on the other side. That's due to the strong cash flow generation through 2013, number one, and number two, we of course also paid down debt as announced to the public beginning of the year. And on the other side, we increased goodwill by the Hybris acquisition we did in 2000, and mainly by the Hybris acquisition we did in 2013 by roughly 800 million, now up to 13.6 billion. And there's always a question what makes up this amount and whether there is impairment around this. Number one, there is no risk of any kind of impairment towards our goodwill. Number two, the main components are business objects with 3.5 billion, Cybis with 3.3 billion, then SuccessFactors and Ariba, each a bit more than 2 billion, and then we add Hybris. If you look to the group liquidity, which increased, as you saw on the previous slide, to 2.8 billion, this is driven by the high operating cash flow despite the acquisitions. You see capital expenditure here and the dividend, which then leads to a total group liability of this 2.8 billion. And if you subtract the financial liability with 4.3 billion, you see that we are around 1.5 billion negative in our net liquidity, which will change going forward with a continued strong cash flow generation in the next year. If you look to the free cash flow, it is on the same level as we had it in 2012. That's mainly driven by operating cash flow, which is impacted by cash outflows for taxes and an increase in our DSO, which is mainly driven by extended payment terms we have to grant to our customers in tougher times. And finally, let me conclude with a strong increase in our equity ratio to 58%, 5 percentage points increase, which is the cornerstone of SAP's financial stability. That's all from my side, and I now would like to hand it over to Jim.
Thank you very much, Werner. And before I talk a little bit about the strategic importance of our performance since 2010 and in particular in 2013, I'd like to just spend a moment to reflect on what Werner's leadership has meant for SAP the last 13 years. With today's earnings, Werner has reported 52 successful quarters for SAP. Wow. Not only has he built probably the most transparent company in the IT industry, but Werner has also been instrumental in driving the transformation of SAP through a series of radical changes in the market, while always making sure we got more profitable on the way. As this is his last annual earnings call, I'd just like to honor Werner for everything he's done, and thank you, Werner. It's an honor to serve with you in this company. Thank you very much. Thank you. Let me also thank you for coming here to Walldorf today. This is where it all started, in 1972. And this is also where we decided to reinvent this great company again back in February 2010. Almost exactly 4 years later, we are today celebrating not only the birthday of Hasso Plattner, but also the 4th consecutive year of double-digit growth for the company. And probably most importantly, the reinvention of SAP and the industry through HANA and the cloud and all of our innovations. In 2010, we decided to strengthen our market-leading role in applications and analytics, but then we made some very bold moves to invest in new technologies that we felt would change the way business is conducted, how people work, and how people live. We predicted that data would move off the slow disk, and big data would be managed in columns in main memory. We predicted that data centers would move off-premise and into trusted clouds, and we predicted that people would be on the move and have a desire to conduct business from secure mobile solutions. Today, it's clear that our strategy was right and that we have executed really well. Over the last 4 years, we have extended our market leadership in the core, growing at least twice as fast as our main competitors. And in parallel, we have become the number one or the fastest growing in all of the 3 new market areas. Most importantly, we have proven, like no other company, that it's possible to move to the cloud business model without giving up growth and without giving up the opportunity to expand the margin. That is a pretty unique combination. This success was driven by the acceleration of our organic innovation capability, complemented with very targeted strategic M&A moves. We have, over the last 4 years, doubled the speed of the innovation at SAP, bringing twice as many innovations to our customers in a year today than we did 4 years ago. And HANA is driving the intellectual renewal not only of SAP, but in fact of large portions of the industry. With the acquisition of Sybase, we became number one in mobile for business. And of course, the acquisitions of SuccessFactors and Ariba were instrumental for us to become now the largest cloud company measured by users, the second largest by revenue, and the largest business network in the world. With all of these changes, SAP is more relevant than ever, and we are ready to accelerate the transition to the cloud. And we'll talk much more about that today. Let's look more in details into 13. As mentioned, 13 marks the 4th consecutive year of double-digit growth since 2010. With that, we have continued to gain market share. In Q4 alone, we grew 6 times faster than our nearest competitor. In the last 12 months, we have consistently outperformed our competition everywhere from a geographical point of view. And we have proven, I think that is very important, that the decision to stay a software company and that the software, the innovative software, will drive the growth in the industry is very, very clear now when you look at how the hardware players have had negative growth rates and SAP have had very positive growth rates. The growth is really based on 2 elements. First of all, we are the most global company in the industry. This allows us to serve global clients, and customers of any size today are all global clients, much better because we have a very strong global presence. And this is the reason why we're winning in every geography. Americas delivered a very strong double-digit growth with software and cloud growing at 15% in 2013, driven by a very strong cloud revenue growth in North America and a very strong core business growth in Latin America. In EMEA, our most mature market, where companies talk about difficulties and lack of investments, we grew 9% in software and cloud, taking significant market share. And of course, with a double-digit growth in Germany, we have proven that even in the most mature market, our innovation strategy makes sense for our customers, delivers value to them, and growth for SAP. So in EMEA, we're growing at least 3 times that of our competitors. And I think very important news is that we in APJ in Q4 returned to growth. We delivered a very strong double-digit growth of 10% in Q4 in APJ, while our nearest competition's revenue declined. We are growing in very high digits in all of the emerging markets. China growing at over 40% in software and cloud. Middle East, Africa, Russia, Brazil, all growing very strong double-digit. So that is the showcase that we are the most global company and we're winning in these markets because we are so global. The second reason for our growth is, of course, that we are delivering more innovation to the market much faster. Our investments in cloud have been accelerating our growth. We now have a run rate in the cloud of over 1 billion euros. With our line of business solutions for HR, for sales, for procurement and finance, we are growing faster than the pure play cloud players like Salesforce and NetSuite, and of course, more than twice as fast as the traditional players trying to move to the cloud. And I think most importantly, in the cloud, we are scaling the business network of more than 1.4 million companies connected in the cloud, trading with each other more than $500 billion of US dollars worth of trade. We're winning in the cloud because we have the most complete cloud solution set, and most importantly, because customers like Danone, Deutsche Telekom, ExxonMobil, and Verizon, they want to consume the cloud while at the same time getting integration to the on-premise stuff that they already have out of the box, or should I say out of the cloud, so that they don't have the challenge of integration. And with our decision to move all our assets into the cloud, we have a unique opportunity to be the cloud company. Now, in that transition to the cloud, it's very important to say that we've always argued that it's not only possible, but necessary to be profitable in the cloud. Who would buy solutions from a vendor that's not profitable? You don't know whether they will be around in the future. And I think most importantly, we have proven that we could transition to become a major cloud player and at the same time achieve our operating income goals and expanding our margin. Now, innovation is not just the cloud business model, but also, of course, HANA. Our performance in 2013 confirmed that HANA is not only the fastest growing product in the industry ever, it is also becoming a real-time business platform for companies and partners. It is the gold standard for in-memory computing. Competition is trying to catch up by arguing in memory, but no one has a pure play in memory-based column store that can combine the transactional world and the analytical world in one database, driving simplicity of landscapes like HANA. In Q4 2013, we accelerated the momentum with HANA. We reached almost 300 million euros of HANA pure revenue in just one quarter. That's a growth of 58%. For the full year, we reached more than 633 million euros, as Werner reported. And at constant currency, we are reaching our guidance, very ambitious goal for HANA for this year. And in total, since the launch of HANA, we have delivered more than 1.2 billion euros worth of revenue on HANA. This is unmatched in the industry. Even the most successful ERP solution in the world, R3, in its best days would never achieve that kind of growth rates like what we've done with HANA. So, HANA is not only becoming a major driver of growth, it is also becoming a platform. You see that by more than 1,100 startups now building their business on HANA, and IT giants like Accenture or even SaaS putting their solutions on HANA to become better solutions at lower costs. We have now more than 3,000 customers on HANA. We have prominent names like Levi Strauss, Burberry, Bosch, Siemens, Appliances, and probably the most prominent showcase of all is SAP, now running its business on HANA, which is why we could do our earnings call earlier this year, because we have our financial numbers in real time. So, Maybe a last comment on HANA. You will see in the report that the suite on HANA, which was our move of the core business into the new world of HANA and into the cloud, is doing extremely well. With more than 750 customers signed up since the general availability in May, this far exceeds our expectations when we launched the product. Existing customers are moving to HANA as their platform for their transactional systems from SAP. And for new customers, the suite on HANA is becoming the default when they want to run their business on SAP at lower costs. So in summary, if you look at our growth momentum during the last 4 years, actually, it's pretty clear. We're leading the transformation of the industry. We are winning market share in all regions. We have reinvented the database and created a next-generation real-time platform for business of any size. And probably most importantly, we have managed the transition to the cloud successfully while still growing our numbers and expanding our operating margin. With this remarkable progress since 2010, we have a very sound basis for now accelerating our momentum and the move to the cloud and extending our leadership as #1 in the enterprise software space. So we're very excited about this milestone, and I'd love to hand over to Bill, my great partner and good friend, to talk about how we will take SAP now to the next level.
Thank you so much, Jim. The first thing I would like to do is recognize that I started my career here at SAP with both Werner and Jim, and it's been an honor for me personally to serve with men of this caliber and this distinction as executives. And since Jim has already congratulated Werner, I owe a great congratulations to Jim as well, because these annual meetings, I think this might be our curtain call on this type of a meeting, but I want to say a few things about this man. First of all, you know him as a great executive and an industry thought leader and a man of distinction and character, but I know him also as an unbelievable friend. And I think what we've done together, not only in the original composition of the strategy along with the executive board, but as friends, both in the limelight and behind the scenes, has been the privilege of my professional career. And on that basis, I not only want to thank him and honor him for his professional service to SAP as he now moves on to even bigger things with the supervisory board, but I want to thank him as a brother, as a friend, and as a guy that I'll always be, with through thick and thin. Jim?
Thank you.
Absolutely.
We're just getting started.
We are just getting started, and I'm sure in that supervisory board you're going to want to see a lot of growth from SAP AG. So I'll keep my remarks brief so we can get into some Q&A. But before I do say anything, I would like to also acknowledge Luka, who Werner has also mentioned, because if anybody could possibly take over for Werner Brandt, it would be Luka Mucic, and it's an honor to be on the same podium with him. And this guy, whether it was his education or his professional career at SAP, he has been #1 and a leader in everything he's ever done. Studying his personal history is intimidating even to successful people. You got a great guy here in the CFO of the future. Let's talk about the 4 years straight. Records, that you are your record, and they kind of speak for themselves. I think it's been unbelievable, the kind of growth that SAP has had. This is the fastest growing mega cap IT company in the world. Very important. As Jim said, in every region of the world, SAP is a growth story. I am particularly excited about the emerging market growth that SAP has, whether it's in Russia, the Middle East, Africa, Southeast Asia, Latin America. SAP is the standard for excellence in business software, and we're extremely proud of that. SAP is also a leader, and we are here today to let you know that we are leading the transition to the cloud. That management has a firm handle on the steering wheel of our highly profitable, secure core, while at the same time we move the company to be the cloud leader. And Q4, as Werner said, underscores the boldness in the cloud. When you increase your billings 50% on a year-over-year basis in Q4, it's a leading indicator of even better things to come in 2014 and beyond. Ladies and gentlemen, complexity has become the most intractable business issue in the world for CEOs. To simplify their business, to ease the way they consume our software innovation is right now our priority. And leading them to the cloud is a way in which not only do we become the cloud company powered by HANA, but we simplify everything so we can do anything for the customer. And that's the genesis of our focus. We are easing consumption and we are easing choice. So as we think about SAP and how we have innovated in the cloud, I'll give you some of the aspiring goals that we share as a board. But not only as a board, we have all spoken to the general leadership team globally of the company, and we have cascaded this message to all the field kickoff meetings around the world. So our people have actually gotten this first. We're a growth company. We intend to be the leader in users, revenues, and bookings in the cloud. We are already the leader in users. We are number 2 in revenue, and we will accelerate the pace. We will simplify everything for the customer through the SAP Cloud, and as a result, we will be the growth story in the IT industry in software in the cloud. We want to elevate SAP to trusted innovator status of business outcomes. One of the things you may or may not realize is that 90% of every dollar that goes into the IT spend of most companies is tied up in hardware and services. And only 10% goes to the innovation layer, which changes processes, innovates business models, and drives outcomes. That's why by going to the cloud and collapsing the IT stack on HANA, we're able to radically simplify the landscape for our customers, lower their cost, and free up capital to invest in software, thereby driving more efficiency and more growth for our customers. We are renewing our focus on industry. As you all know from covering SAP, we've been a market leader in 25 different industries. We're redoubling our focus on industries like retail, like banking, like healthcare, like public sector, because we see a huge opportunity, particularly on the backbone of HANA. And we want HANA to be the business platform standard in the world. So we are very open to the ecosystem of partners that want to run their clouds on HANA. Because by doing so, HANA becomes the de facto standard. And we already have examples that Jim gave of Accenture and SAS, and there's many others. And this is going to be a wellspring of growth for the company in the future. We believe strongly in the user experience and making that intuitive and beautiful in every engagement with the customer. Many of you have heard about Fiori, which is the reinvention of the user experience, and we put that user experience to the mobile because we believe mobile is the new desktop and it is ubiquitous, and that's where we're driving the user focus. And we have empathy and humility for our customers and our employees. We are focused on the customer's customer, and we are sharing a dream, actually, Werner and I in particular, as we focus on HR together. Werner's the leader, but upon his retirement is going to hand off HR to me. We want to be the employer of choice. And we really care deeply about our employee engagement, our retention rates, and being able to hire the best and brightest people, whether they're in Germany, they're in New York City, or they're in Shanghai. We want the best and the brightest. And we want to leverage an open and vibrant ecosystem. I also want to say something in regard to this employer of choice before I go into this picture. I am personally proud and honored to be with you here in Waldorf, Germany, exactly what Jim said, where it all began. And I'm also equally as excited to be moving to Heidelberg. And all the rumors about SAP and the American and the move away from Germany, they're all false. On the contrary, we're redoubling our focus on our homeland, and we're redoubling on German engineering and the excellence that comes from our great developers in Germany, and we'll take that to the rest of the world. And you count on me to be a great friend to Germany. You got my word on that. So, as we simplify our business model around the HANA platform, and we move everything to the cloud, we are taking this to the model, to the products, and to the way we engage with the customers. Since much has been said about the product and HANA, I'll just focus on the customer. Think about a customer having one account executive to serve their interests, with specialization from every area, whether it's industry or cloud, but easy to do business with. Think about one customer support model, where the customer gets the very best support, and the customer has no confusion in dealing with SAP. Think about the idea of the digital prospect coming in to SAP on the web, and instead of dealing with 1,000 different experiences, dealing with one. These are just some of the examples, aside from the massive simplification of the suite on HANA, where we're going to make it easier for the customer. And we're going to have tremendous humility for the customer. And I think by redoubling our focus on making beautiful products, revamping the business model to the cloud, and absolutely caring more and doing more for the customer than any other business software maker, we will be the long-term leader. So here you see an example of the share of wallet. Today you see the customer spending so much on hardware and services. And tomorrow you see us collapsing the stack on HANA in the SAP cloud and freeing up all kinds of cash flow for innovation. And we focus on the following areas. Werner touched on this, so did Jim. But big data, obviously, big data is a mega focus of SAP's, and with HANA as our platform, we feel like we can monetize that for our shareholders, but moreover, we can help the customer. We see a world of customer, business to business, but business to consumer is where the world is going. That's why we invested in Hybris, because Hybris is the omni-commerce solution. No matter what channel the customer comes into, they can have an e-commerce experience. So now we can focus on our business customer, and they can focus on their customer, making them real-time predictive offers to drive their business. These are the industries I talked about, and count on us also, not just to focus on these industries like healthcare, public sector, retail, and financial services, but also on the fast growth markets in the world. We said some time ago we would focus on China, and we would grow China. You see China growing now, and China really prospering for SAP. But this is happening in Turkey, this is happening in Middle East, this is happening in Africa, this is happening in Mexico and Brazil, all parts of the world. So here's what it comes down to. In the end, we're transitioning to the cloud while growing our stable core. We're making a commitment to you today and to our shareholders that our top line 2017 outlook now moves to 22 billion plus euros in total revenue. We've taken our 2015 commitment in the cloud and now made it 3 to 3.5 billion euros in cloud revenue by 2017. And yes, we have moved our 2015 35% margin ambition to 2017. Why did we do that? I'll tell you exactly why we did that. Because when you move your business model more to the cloud than on-premise, your revenue model changes. And as you become familiar with ratable recognition of revenue in the early years, that will put pressure on the margin. But the good news is, and that's why we're giving you the midterm guidance, in 2017 and beyond, it keeps giving more value back to the shareholder. So in the short term, management has its hand firmly on the steering wheel with our guidance for 2014, which Luka will take you through. And in the midterm, We see a great future for SAP, and we are going for it. We'll help companies run their whole company in the cloud, and we'll go after human capital management, we'll go after sales, we'll go after procurement and other areas. And we say to all competitors of SAP, we can't wait to meet you in the marketplace. Thank you very much. I now turn it over to my colleague, Luka Mucic.
Yeah, thank you very much, Bill. I'm also happy to welcome you today in Walldorf, which is actually my hometown. So it also started all here for me personally, albeit 1 year earlier than for SAP, I have to say. And it's also my first earnings event, and I'm truly excited to have this event here and be able to be part of a great transformation story for SAP as a company. I've been with this company for 18 years, and what Bill has alluded to, the energy that at the moment is flowing through the company while we are managing the transformation to the cloud is just exciting. So great to be here with you today. As you have heard from Werner, Jim and Bill, SAP is clearly setting the benchmark in terms of profitable growth in the IT industry. And we do this through a unique and powerful combination of both a strong, growing cloud business, but also a very solid, highly profitable core business. And our guidance for 2014 is actually reflective of these two core strengths. So if we take a look, first of all, let me talk about the cloud subscription revenue. We expect to continue to see growth there. From a non-IFRS perspective at constant currencies, we expect our cloud subscription revenue to reach a range of between 950 million and 1 billion euros, up from 758 million at reported euros that we had in 2013. And let me add a little bit more color to these numbers. The upper end of the guidance that we have given resembles a 32% growth rate based on the 2013 results. That is actually similar, and Werner has briefly mentioned this, to the organic growth rate that we have seen in 2013, discounting it for the acquisitive effect mainly of the Ariba acquisition. I would also like to mention that with these projected growth rates on the cloud subscription side, we expect that by the end of 2014, we will have reached a total cloud revenue run rate of between 1.3 and 1.4 billion euro, compared to 1.06 billion euro that we had reached at the end of 2013. So this could give you a good feeling for the trajectory that we are on and how we are progressing on the way to our targets that Bill has outlined. And coupling this with a very solid performance of our traditional on-premise business, where we again target to outpace the competition, you can see here that we expect to increase our software and software-related service revenue overall, non-IFRS at constant currencies, at a range of between +6% and 8%. That's off a base of just above 14 billion euro that we have reached in 2013. As Werner has mentioned, we are clearly on a strong trajectory to increase the recurring revenues at SAP overall as a relative proportion of absolute revenues. And extrapolating the growth that we have seen in the past years, as well as this guidance, and then looking into the midterm perspective up until 2017, we clearly aim to see this number rising to the approximation of 2/3 of our overall revenue size. Last but not least, while we are transforming SAP to become the cloud company powered by HANA, we're equally committed, as Jim and Bill have said, to also continue to increase our non-IFRS operating profit. Actually, in 2014, we are aiming at an increase to 5.8 to 6 billion euro, off from a base of 5.51 billion euro in 2013. So as in the past years, in addition to our aforementioned 2014 guidance, we have also provided you ranges for our IFRS and non-IFRS tax rates, as well as our non-IFRS adjustments for the full year 2014 to help you with your financial modeling. I do not really want to go through all of the details that you see here on this busy slide. I just mentioned briefly that we expect a slight increase in our tax rates, both IFRS and non-IFRS in 2014, as the 2013 rates have benefited from some one-time effects. And in terms of our non-IFRS adjustments, the most notable differences to 2013 will be that we expect our deferred revenue write-downs to come in substantially below what we had seen in previous years, as basically the effect from acquisitions is reduced over time. While on the other hand side, we expect our 2014 adjustments for share-based compensation expenses to increase to a value between 470 and 510 million euros. The remaining adjustments, as you see, are projected in a similar range as we have seen it in 2013. So with this, if you take back three things from this earnings conference and the guidance that we are giving in 2014, from my perspective, it should clearly be SAP continues to be bold and poised for growth in the cloud, while at the same time preserving the solid fundamentals of our core business and going for profitability that actually increases as we transit. And that's, from my perspective, a pretty unique value proposition. With this, I would like to hand back to Christoph. Thank you.
Thank you very much, Luka. Let's now start the Q&A session. We take questions from the web. Those ones who are online, please address press@sap.com. We also take questions from the phone. Please press *1. If you'd like to ask a question, we're trying to weave those ones in. And of course, everyone here in the room is invited to ask questions. And if you mention your name and your publication and to whom you are directing your question, facilitates the Q&A. So, the first question, please. Herr Kuhnen, Handelsblatt.
Yeah, Kuhn from the German business daily Handelsblatt. A question addressed to Mr. Brandt. Why is there no risk at all for any impairment regarding the goodwill? Can you explain this a little bit more?
That's very easy. If you look to SAP overall, we generate net income of far more than 3 billion. And that's the answer. Everything we have is profitable. Even if you look to the evolution of our profitability in the cloud, if you go into the segment reporting, that's unbelievable. We had a big negative last year and are now about, if I remember correctly, around 150 positive. So from that end, there is no reason to think that there could be any kind of impairment.
Thank you. Our next question, please. Herr Rahn, Bloomberg.
Yeah, this might be a bit a trick question, but on the one hand, you say cloud increases because of the recurring payments at the same level. On the long term, it brings more revenue to SAP. But as a salesman, telling your client that in the long run he's going to pay more using a cloud product, it could be a tricky proposition. How do you handle that? And do you ever get to ask that question? Thanks.
Well, I think there's two advantages to the cloud. I mean, for the customer, they reduce their cost on a subscription basis if they collapse the hardware, the services, and the risk associated with implementations that are too time-consuming, so they take too long to get to value, and the risk associated with that is pretty big. So if they can subscribe to a cloud-based solution and get it up and running quickly and get their people productive, that's a win for the customer. For us, in the short run, you wait a little longer for your money. But the beauty of the cloud is it's very sticky, those revenues are highly recurring, and the renewal rates are very high if you do the job right. And therefore, your cost of sales to get those renewals and the additional snap-on solutions is much lower than the traditional core business. Those factors contribute to a medium-term and a long-term highly profitable cloud franchise within SAP.
And maybe I can at one point from a CFO perspective, if I would be in the shoes of the customer, there of course is a big advantage because I do not need capital expenditure for my investments in IT. And this means I do not need to finance anything.
So who is paying? The collapse of the hardware costs because we optimize, put it on HANA, and simplify. That's really why it's a benefit for the customer and for SAP at the same time. We're not just putting the license in subscription, it's the whole delivery.
Thank you. Our next question, please. Herr Paravicini. Right front row, please. Thank you.
Hi, Stefan Paravicini, Börsenzeitung. Mr. McDermott, you already elaborated on the margin and why you postponed the margin goal to 2017. But still, could you elaborate a little bit more on what is exactly hitting the margin? Why the push into the cloud? Is this investment in infrastructure at SAP? Is it probably investment in more salespeople, or is it just the way the revenues change over time?
Yeah.
Thanks.
And Werner can build on this. Werner can build on this if he likes, but it's primarily the revenue recognition as opposed to any large-scale investment that SAP is making. Of course, a company like SAP makes steady investments in a lot of things, but it's really ratably recognizing revenue that would normally be recognized up front in a time-based subscription. And that, in the short run, does put pressure on the margin. But I want to make this clear. The operating income of our company is going up nicely year over year. I'm unaware of any other company that has managed the transition to the cloud, growing the core, expanding the operating income, and putting a forecast on the table that is bigger in terms of growth than any other company, mega cap company in the cloud industry. We're doing the trifecta, all three things at once. That to me is pretty impressive.
Werner?
Nothing to add.
Good. Well, Ms. Quast was the next one. Microphone in the middle, please.
Thanks for picking up my question. Ursula Quast from Dow Jones Newswire. I've got a question about the competition situation. I mean, everybody is trying to get into the into the cloud, or is forcing to get into it. So, what would you say? Is it? I guess it's not getting easier for you. And can you say something about who you think is more critical to SAP, a company like Oracle, who is also the on-premise business, or the pure cloud players? And could you maybe say when do you think they will earn money, the pure cloud players? Thanks.
If it would be polite, I would like to leave this chair and come around and give you a hug. Because it's about time somebody asked that question. It's about time. SAP is 20 times more profitable than a company like Salesforce.com. If you look at SAP, we have 20 times the company Workday is. And these companies don't make money. And the beauty of what we're doing and the beauty of our franchise is, now that we have declared we're going to be the cloud company and we're powering everything on HANA, we're going to go after those line of business cloud companies with everything we have. So as it relates to human capital management, we, as you know, acquired SuccessFactors, and we have a robust, fully integrated human capital management solution provisioned to the cloud, powered by HANA. If you think about Salesforce.com, they've had a free run of it for a while with cloud-based sales, no more. I really want you all to see SAP's Sales Cloud. It's quite amazing. We're winning a lot of transactions, and they are big, big in terms of the pipeline opportunities. And again, powered by HANA is a huge competitive advantage. Ariba, as Jim talked about, has been a fundamentally beautiful growth story for SAP. And with 1.4 million customers transacting $500 billion in a market opportunity of $12 trillion, that could be a mega opportunity. So what I think we had to do and I'm sure my colleagues have some thoughts on this too, is declare that we were going to accelerate the transition into the cloud to unleash 67,000 employees and 2.1 million people that are in the SAP ecosystem to follow that lead. And I think that puts tremendous pressure on the point solution cloud providers, because in the end, in this industry, look at history. Look at the 90s into the 2000s. The suite always wins. So now you've got the best of suite applications on HANA in the cloud from SAP, and we have declared we're in it to win it.
Thank you very much. The next question, please. Mr. Brandt.
Good morning. A key factor in persuading customers to transition to the cloud is presumably trust, that they can trust that their data is secure. Now, over the last 6 months or so, we've had revelation after revelation that, in fact, data held in the cloud is not secure. Some of your US tech company competitors have made some very strong comments about what's been going on. Mark Zuckerberg pretty much said that the USA had screwed up. I've missed that kind of commentary from SAP. It's a German company, but obviously huge presence in the US. So would you like to take the opportunity now to express your own thoughts about this? And how can you really assure companies that your customers, that their data is secure? Because quite frankly, right now, it seems like nothing is. Thank you.
Yeah, thanks very much. It's a long dialogue. I don't know how long time we have. But let me say very clearly, first of all, we think the debate around that situation is good. It's time to discuss what it takes to run secure clouds, not for consumer toys, but for business. And we've always claimed that we need to bring the enterprise quality of software into the cloud. Some people said we were late in the cloud. We've just accelerated to be number one, but with the enterprise quality of software that we have 42 years of experience on. On top of that, it is clear that this debate has led to this discussion, should we have country-specific clouds? Makes no sense. By definition, a cloud is a global cloud. It allows cooperation across nations, across companies, and an enormous speed of innovation. We need to get to that value. So how do we do that? We do that by defining the rules of a secure, trusted cloud. We have such a cloud today, and we have been very active since the beginning of this debate to share our experience with the European Union, with the Americans, with the Asians, so that we can define a true trusted cloud. We know how to do that. We have 35 million people sharing their human resource data. There is not more emotional kind of data in this world than the human resource data in companies. We run companies in 35 different industries. We have 42 years of experience with mission-critical data held at secure locations, either on-premise or in the cloud. And in fact, if you turn all of this, we are actually seeing the opportunity and growth for SAP because we have data centers in multiple locations around the world, offering the customer the choice under which jurisdiction do they want their data managed.
Thank you. In the interest of time, because coming to the full hour, I would suggest we take 2 more questions, and then you still have time for a little bit of networking with our executives on stage here. The next question, please. Mr. Finsterbusch, FAZ.
Yes, coming back to the security question, can you tell us how many attacks you had last year on the SAP whatever platform database, and what have you done to prevent any real big issue on that? Thank you.
Yeah, so since the beginning of SAP, we've had attacks. We run what we estimate is 70% of world transactions through SAP systems. And therefore, we have probably the biggest specialist team dealing with security since 42 years. And we're constantly being the leader on this topic. We've seen the difference between consumer software and enterprise software. And I claim that the reason we're successful is because companies trust the brand of SAP, that we know how to do this. I'm not saying, I'm basically, this will always be a fight. So the company that has the biggest strength in fighting it will win. And we are the largest enterprise software company in the world.
And maybe I can add here, without going into further detail. Of course, we then will provide on a constant basis security updates to our customers so that they have a secure environment. And this happens very frequently.
Maybe a last comment on this, cloud versus on-premise. Many people think that if I control my data center myself, it's more secure. I would claim that we have more security experts managing our data center than any of our customers have individually, because we can make one effort for many customers.
Thank you very much. The final question, if there's one, Herr Tauber, Die Welt.
Just a brief question. The 2 billion revenue goal in the cloud, is it reachable without acquisitions?
You're referring to the 2015
Yes.
goal? We never distinguished whether it would be purely organic or there would be some inorganic activity in that number, or the 3 to 3.5 billion for 2017. But I can tell you that largely our organic growth is driving and propelling the SAP company.
Thank you very much.
Thank you. Thanks, everybody. Pleasure being with you.
Yeah.
Thank you.